Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Well, coming to the market yesterday, uh, okay, there is coming to the market yesterday, we could see that the Indian stock market opened with a gap up. So, what exactly led to the rally the initial positivity is nothing but China. So, in fact, yesterday being a Tuesday, we had an early podcast. So after that, Chinese market opened, and then Chinese government released a plan to kind of recover their property segment in sector in China. So that kind of gave a very good positivity to the US Chinese market, and Chinese market started going up, and that positivity was seen in India as well, as we also opened with the gap up yesterday. So after that, the markets actually continue to go up. In fact, Nifty has created a brand new high yesterday. So after that, but we could not see sustain that level, and we could see the market coming down. Interestingly, yesterday the FIIs have continued to buy. They bought for almost more than 1,000 crores, and the DIAs have also just booked very small profit of around 10 crores. That's like nothing. So basically, it was more of a buying. And one important thing that we need to note is there were reports that suggested that FII holding in India is more than $6 billion now. So that is something really huge, and looks like there are more investment coming as already global markets have started recovering. And majorly, if you see globally, the major challenge that we had was the inflation. And as inflation looks like it is getting tamed soon, so that positivity is probably encouraging FIIs to come back to India, which was more like a missed opportunity when they exited from India last year. So that was something that is probably driving the market at this point of time. But however, like we've discussed earlier, FIIs, how long are they going to buy? How long will this continue? Is something that we never know. So by the way, so what happened was after this, during the market hours yesterday, in European market started falling. So when the market started in Indian time around afternoon is when European market opened, and they started falling. So that negativity was kind of seen in India, but still by end of the day we could see some positivity, and the markets closed still above 19,400. So that's a good sign for India as of now. Apart from that, if you look at when the Indian markets closed, European markets started rising. So yesterday the markets were kind of today we have the inflation data coming in from US. So with that, market should have been jittery, but that was not seen. But European market started gaining, and yesterday closed in good positivity. So when the European market also closed in positive territory, we could see the US markets again opening with the gap up. And yesterday Dow was up almost 300 points, again seeing some good positivity in the US. So majorly the expectation is that the inflation data would be coming good within expectation. So people are expecting the markets to go up. But then if any surprises come, that could actually lead the market downwards. So tonight, holding any positions can be dangerous. So it's better that we, all the positions that we are holding, if you're a trader, to square off today. And because anything can happen, either a big gap up or a gap down. So it's better to be on the safer side. You can exit and probably take next week's trade. So that can be done as a trader. As far as investors concerned, like we've discussed earlier also, every dip in the market can be considered as an opportunity to buy. So if at all you see a dip, so we had a dip just a few days back, and now Nifty is back on track. Similarly, any other dip that comes in future can be seen as a good opportunity to add few stocks into your portfolio. Apart from that, today majorly focus will be on TCS. Because TCS is the first IT company to come out with results today evening. It will be coming post market hours, but then since the market would like to remain cautious, and most of the IT stocks have been beaten down, there might be some short covering rally. So if that happens, probably we could see some positivity in IT sector. But then will that sustain? That will depend on what results come out of TCS today evening. So that action can be seen tomorrow. So this could again trigger the market. Apart from this, even though global markets are positive, there is some negative for India, though that may not affect it much. The first thing is we will see a gap up opening because the US markets naturally have closed very positive. and European markets also closed. And if you look at the Asian markets, also most of the Asian markets are doing well. But then yesterday there was a GST Council meeting, and there are two things that has come out. So first thing is that they've increased the VAT, sorry, GST on online gaming companies. So online gaming. So basically, online gaming naturally means it is going to affect Delta Corp and Nazara Tech. So these two stocks and many other which are is listed, like even I think Paytm also has some exposure to online gaming stuff. So an increase of 28% tax or VAT, right, is something. Sorry, GST is very bad. So definitely we could probably see a very big fall in these two stocks and others also. So that could be a big negative to these stocks. But please understand, these companies are, these companies don't have much weightage on Nifty. So even a fall may not affect Nifty much. But apart from that, if you look at Reliance has been doing well, and with Reliance supporting the markets have been actually doing well. In fact, yesterday Infosys also did really well, and Infosys and Reliance partly, together have held on to the market yesterday. So apart from that, next important thing to focus on is in the GST Council, they also have increased the cess. So they've added a new cess on all SUVs and MUVs above the length of 4 meters. That means all the vehicles like a Innova or a XUV, Scorpio. So all these vehicles, or Tata Harrier, Tata Safari. So all these vehicles would have an additional cess of 22%. 22%, right? And GST also around 20% plus. So that together, I think the taxation on Indian made SUVs also is almost 50%. So it means the prices are going up really high. So that again can be a negative news for companies like Mahindra and Tata. So we might see some negativity there also. So these are few things which can actually be negative. But then again, if Mahindra but I don't think they'll fall much, because Tata and Mahindra have exposure to smaller vehicles also. But then it might be a small negative, of course, whatever it is. So that is slightly negative for auto stocks. But then probably we could see some recovery as the markets are kind of bullish. So that can be seen. But apart from that, 19,500 on a technical level has been a very important resistance. So yesterday also we could see the market trying to go up and come down. But at any point of time, a big sell-off comes. That's something that we should be cautious about. Naturally, markets can tend to be dangerous at those times. So that's something should be that we on focus on. So that's it for now. Today is Wednesday. Tomorrow is expiry. Again, a day for volatility. So with all these news around, today onwards, as the major stocks results are going to come, the markets could be more driven by these stocks. So we could see markets being very uncertain. So this is something that we can be noting, and we should trade cautiously. So that's it for now. I think we've discussed most of the, I think all the important data for this day. Let's catch up with more details tomorrow morning. Wishing you all a great day ahead. This is Srikanth Rajan signing off. But before we leave, of course, do press the like button if you love the content that we share. And do share the podcast with your friends and relatives to help them learn and invest together with us. Goodbye. Have a great day.